Hello dear students, in this video we are going to see the problem of journal entry. Journal is a first book of systematic record of financial transactions of the business. Journal is also called as original entry book, prime entry book because financial transactions are first of all recorded in this book as and when they takes place. Journal is a chronological record of accounting transactions showing the names of account that are to be debited or credited and any useful supplementary information about the transaction is mentioned in the journal. This is a pro forma of journal. Okay, date, particulars, ledger, folio, debit and credit. In particular column we record the debit account, credit account and narration. Okay. First transaction is on 1st January, Geeta started a business with cash rupees 50,000. See, what is the first step? First of all, we have to identify which two accounts are involved in this transaction because this journal entry we record based on the double entry system. In double entry system, for every transaction there are two aspects, that is receiving aspect and giving aspects. Okay, that's why first of all we have to identify which two accounts involved in these transactions. Geeta started a business with cash. In these transactions, two accounts involved, that is cash is introduced and Geeta. Who introduced the cash? That is Geeta. Okay. Date column we write down the date 1st January. In particular column cash account and to Geeta's capital account. See, there are three types of account: personal, real, nominal. Now we have to identify which type of account it is. Accordingly, we have to apply the rule of accounting. Cash account is a type of real account. In these transactions, cash is coming into the business. What is the rule of real account? Debit what comes in and credit what goes out. See, cash is coming into the business. That's why cash account is debited with rupees 50,000 to G's capital, means Geeta's capital account. In these transactions, Geeta is giver of cash. Okay, that's why Geeta's account is credited. Geeta capital account is a type of personal account and rule of personal account is debit the receiver, credit the giver. And Geeta is giver, that's why Geeta's account we are going to record on the credit side. And then we write down the short explanation about the transaction, that is being started a business with cash. This is a journal entry of Geeta started a business with cash rupees 50,000 transaction. Now second transaction on 7th January deposited rupees 25,000 into the bank. Again in these transactions two accounts are involved. Cash is deposited into the bank means cash account and bank account. Okay. Date 7 January. Bank account. Bank account is a type of personal account and rule of personal account is debit the receiver, credit the giver. Here bank is receiver of the cash. That's why bank account is debited. To cash account. Cash account is a type of real account and rule of real account is debit what comes in and credit what goes out. Cash is going out of the business. That's why cash account is credited. And being amount deposited into the bank is a narration of this transaction. Clear? Now third, on 9th January purchase goods from Snehal rupees 5,000. Here person's name is mentioned. When person's name is mentioned, that transaction we assume as a credit transaction. Okay. That's why which two accounts are involved in this transaction? Purchase account and Snehal account. Because name of person is mentioned. It is not mentioned cash purchase or which. That's why we assume that this transaction is on credit basis. Okay. When we're recording the credit basis transaction, we have to mention the name of that person. Okay. Again, 9 January date column, purchase account and to Snehal account. Why we record the purchase account on debit? See, purchase account is a type of real account and rule of real account is debit what comes in. Okay. While purchasing goods are coming into the business, that's why as per the real account rule, we record the account when goods are coming into the business. That's why purchase account is debited with rupees 5,000. To Snail's account. Here Snail account is a personal account. Rule of personal account is credit the giver. Who is giver of the goods? Snehal. That's why to Snehal account is credited with rupees 5,000. Narration. Being good purchase from Snehal on credit. 11th January. Sold goods to Maya. Here also it is not mentioned whether cash sale or credit sale. But person's name is mentioned, means we assume that that transaction is on credit basis. Date column 11 January, particulars Maya account and to sales account. See, Maya account is, why Maya account is debited? Because Maya account is a personal account and debit the receiver, the rule of personal account. Here good receiver is who? Maya. That's why Maya account is debited. To sales account. Sales account is a type of real account. Rule of real account is credit what goes out. Goods are going out of the business. Okay. That's why to sales account is credited with rupees 3,000. Narration is being goods sold to Maya on credit. 15th January. Purchase furniture for cash rupees 3,000. Date 15th January. In particular column we write for furniture and to cash. Here what purchase is mentioned, that is furniture is purchased on cash basis. That's why furniture is one of the account and cash is another account. These both accounts are type of real account. Okay, what is the rule of real account? Real account rule is debit what comes in and credit what goes out. See, furniture is purchased means furniture is coming into the business. That's why furniture account is debited. To cash account, against that furniture, cash is going out of the business. That's why cash account is credited. Narration, being furniture purchased for cash. 19th January, sold goods for cash rupees 2,000. Here sale transaction is occur with in cash. That's why two accounts, cash and sale account. Okay, these both are the real account. Rule of real account is what? Credit what, debit what comes in, credit what goes out. Goods are going out of the business. That's why sale account is credited. Cash is coming into the business. That's why cash account is debited. And being goods sold for cash is the narration. 20th January. Cash paid carriage rupees 50. Okay. Here is a cash transaction. That's why one account is cash and carriage is another account. Carriage is the nominal account. Okay. Nominal account means accounts of expenses, losses, income and gain. And what is the rule of nominal account? Rule of nominal account is debit all expenses and losses, credit all income and gain. See, carriage is expenses. That's why carriage account is debited with rupees 50. And to cash account is credited. Cash account is a real account and rule of real account is credit what goes out. Cash is going out of the business. That's why cash account is credited with rupees 50. Being carriage paid is the narration of this transaction. 25th January, receive commission rupees 25. Again here two account, cash and commission. Here cash account to be debited. Why? Because cash is coming into the business. Because we receive the commission. That's why cash is coming into the business. Cash is a real account. And rule of real account is debit what comes in. To commission account. Commission account is a nominal account. Here commission is received means that is income or gain. Okay. That's why as per the nominal account rule, credit income and gain. That's why we record to commission account on credit side. Narration, being commission received. 20th January, paid insurance premium rupees 200. Again here insurance and cash. Okay. Insurance is a expenses. That's why insurance account is debited. To cash account, cash is going out. That's why cash account is credited. Narration, being insurance paid. Then 31st January, receive rupees 2,000 from Maya on account. Okay. Here two accounts involved, cash and Maya. Receive rupees 2,000 from Maya on account. That's why cash account and to Maya's account. Being cash received on account from Maya. Okay. Cash is coming into the business. business of account, business account. Okay, that's why cash is coming into the business. That's why cash account is debited to Maya's account. Here Maya is giver of the cash. Okay, as per the personal account rule, credit the giver to Maya's account is credited with rupees 2000, being cash received on account from Maya. Okay, these are all the transactions in which we see how to record the transactions in a journal. Now we are going to see overall how this is the journal entry. Okay, first transaction, second transactions, likewise we record the transactions. Cash account debited to Geeta's capital account. Then narration, likewise we record each transactions. Okay, and at the end we have to find out the total or total the debit and credit balance. This is the journal entry of all the transactions, that is these transactions which we have seen separately. This is a summarized sheet of journal entry. Thank you.